Hey traders, Nick Shaheen here recapping the week ending in 410. Hopefully you had a good week. Markets did. The major indices reversed 2 red weeks in order to post a green week. And let's start there. We have had, let's see here, we'll start with the SPY, which 2 red candles, one of which was a doji, was followed by this green one right here. A candle that looked scary at the open, touching the lower end of the rising wedge that we have, but then closing at the upper end. So that's what you like to see in a strong bullish move. I need them to break this red line here in order to reach for the upper end of the wedge, the green one. That would be good indication that there will be follow through and there's appetite for more risk. Okay, so the Qs. Also a strong performance. We have had a lot of strength in certain stocks, which I don't like to see. I like to see a broader move where everything is up a little bit rather than a few things up a lot of it. Case in point, like not just to the Qs, but in general. GE, for example, on Friday, based on financial engineering, was up like almost 11%. For such a big box and the heat map, I mean, that makes a big difference for the indices. These are strong moves that will need to be replaced by strength from something else for us to maintain the upside. So again, yeah, we kind of scary. We lost the lower end, not the big green one, but the little red one. So we're still in the middle of the green ascending channel, which is also healthy. And we need to break this red line right there in order to reach for the upper end. So we have healthy setups, but we have had healthy setups in the markets for breakouts for quite a while now. None healthier than the actual small caps, and it's important to note that. The small caps have been leaders up until 2 Thursdays ago, just before Good Friday day off. They stopped leading. And they've lagged most of the times, with a couple of times where they were in line. I don't like to see that. I like markets that are going up where the small caps are actually leading. It's a big basket of stocks. It speaks better. They've been hanging the highest, closest to the breakout. So, and now they're just kind of like, okay, I'll move with you at broader indices if you still want to move, but I'm not going to lead. So I've been leading for so long, I'm a little tired, so I'm going to be, playing lagged or in line. We kind of have a little rising wedge inside of a rising wedge. So they need to hold this one red line in order to not break it and then reach for the lower end of the other rising wedge. And with that, they're putting in higher lows, knocking on some sort of a roof. And if that roof breaks, they will reach for this one. And once they reach for that one, they will have a chance to break out. All right, so this is the big picture of things. And this is the week in recap, okay? Visually, you can see that the S&P, this is the ES minis, started the Monday pre-open scary, but then they had a rip-rolling rally, which banged up against a roof once, twice, 3 times, and finally broke out of it. And it's not an all-time high, but it was a good performance. But it was well within range of the pre-open with the preset ranges that we had from the open interest that I publish every week. So it was not a surprise. It ended up at the upper end of the range where resistance started. So same with Apple, played along with its own resistance. Nobody wants to explain to me what this is. 130 tick up there. Maybe it's a preview. They've done it before at the 125 level before, if I can remember. So anyway, the NASDAQ, same deal. We started scary on Monday, and then we meandered up the whole week. It failed a little short of my target based on the trend line, but it still put in a good week. Small caps, you can see how more hesitant they were. But they still had a decent week themselves to follow up 2 green candles, whereas the broader indices did not have those green candles. So this is the picture. How about oil? Oil, oh my gosh, showed some brilliance, but then faded quickly back to touch the 50 again. So it is a manipulated market. I don't trade it. It's just important to note. Apple had a decent week, and Google had an okay week. So the ranges are still in play. I've been telling you that we're trading sentiment, and I have to put in some of my own sentiment. I'm a fundamental trader, so I trade my thesis. My thesis has not changed. I can tell you my thesis in 10 seconds. Okay, basically, rates are rising in the U.S. Economy is recovering. And the Eurozone is still mired. They're working with their own QE, no QE in the U.S., strong dollar. China is still a mystery, and boy, is it bubblicious now with this incredible move. I'll show it to you in pictures. Japan, someone would say, is a scary experiment. Geopolitics, still scary. We're talking nuclear bombs now. Oh my gosh. Oil, still depressed, and the Greek exit is still looming. So the thesis is still the same, right? But I have to interject some of my own sentiments. I feel like traders are playing chicken with the events that are on the table, like all these events I mentioned, meaning they're going to continue to ignore it. And even they know the event is coming, they will ignore it until the last minute, and then they switch. And that could make it dangerous for the shorts. Even though the shorts may be right as to we should have limited upside, the traders might ignore the danger until it hit the ticker tape with regards to headlines. So keeping that in mind, I'm going to give them more room. If I'm shorting, I'm going to short higher and further out, a slower moving trade, rather than try to short the 2100 when I know the 2100 SPX is the upper end of the limit for this week or the start of resistance. I'll try to short it at 2140 or 2150. And if I can't, I don't find premium, I go up higher and out in time to find that premium. I don't want to fight the fight here. I want to fight the fight with using binoculars. If you don't know how to do that, hit me up. I'll teach you all about options and spreads. Okay, so having said that, the ranges are still about the same. We're meandering. The earnings coming, they could break the meander one way or another. You've heard me say it. Earnings are a coin flip. Apple could deliver absolutely fantastic numbers. If they say one wrong word, the market could completely reject the guidance or completely reject it and sell it. Having said that, Apple is a threat to shorts because if it runs, it has the potential to reach 140 on nothing. Apple is cheap, but that doesn't matter. Markets, it's what, like if you bought a Maserati, I said that before, it's worth 90,000 2 years down the line. It's still worth 60,000, but the markets will only pay you 30,000 if you're trying to sell it on the street. That's what it's worth. It's not worth 60 anymore. It's what the people are willing to pay you for it is what it's worth. So Apple is always cheap. It's not expensive. It should be priced higher, but will they give it that premium? Technically, it could get to 140, no problem. And earnings could be that catalyst. And if Apple gets to 130, 40, that's a big, big heavyweight in the market. This is Apple in the NASDAQ. And guess what? This is Apple in the Dow. And this is Apple in the S&P. Apple is not in the Russell. However, sentimentally, the Russell will chase the other two if the other two are running. Okay? So you have to keep that in mind. Yes, we have catalysts that can break the ranges. And as I'm more bearish than bullish, meaning I think there's less upside than people think there is. I want to be cautious shorting. I want to go out, give myself some space, take some positive money, some bullish money in order to hedge my short bets, okay? So this is a caution on ranges. The ranges are still meandering for the next week at least based on the data from this week. This could change on Monday pre-open. Members will see the pre-open ranges printed before the open on Monday. So having said that, let's look at the ranges in pictures, and we can start with the SPY. On the daily, you can see that we've bounced off of the lower end and kind of broke through this little brown end here and reaching for this green line and this one. And this would be the all-time high area that we've visited 2-3 times before. Will they have enough oomph to break out? Earnings could be that oomph. If not, they will trade the range. We have had higher lows, which is good, knocking on a roof, which is good for bulls because that roof will eventually break if they continue to have enough oomph in it. One bad note is you can see these happen often. We've had a few that lasted longer, but there's always the danger that they want to revisit the lows before the highs. And this was the daily. And how about the NASDAQ? Same story. These are steep channels. I like to see an easier channel, but you can't argue higher lows knocking on roof. The roof is a little further away, about 1.5 points or so. And once it gets there, will it break out? It's not new highs, all-time highs. All-time highs were in 1999, 2000, right? but they're recent highs for sure. So we are set up. We have had the setup for breakout for so long. The bulls just need to walk through them. None truer than the actual small caps. They've had the breakout set up for weeks, and they did try, and then whoosh down, and they're trying. So now we're trading this yellow channel, which is nice and orderly, and we have a small rising wedge inside that channel. And the scary part about it is, look, every candle touches both ends of that wedge, so there's pent-up energy here, and that could break in either way. This is an indecisive candle, doji-ish in nature, the one from Friday. So I'd like to see what they do with these orange lines. Will they break it to the upside to reach for the extension of that yellow line, or would they revisit the low one more time? Again, higher lows, that's always good. But they're taking too dang long to break out. All right, let's see what happens. But if you remember, when we took too dang long to break out of the 1900s, we did it in a big way. So you don't want to be that bear that gets surprised with a move like this. Okay? Got to make room for it. Sentimentally speaking, which I am not a sentimental trader. So I trade fundamentals. All right, there's another thing that I needed to recap, which is the transports. For a while, they looked scary. They were trading in opposite direction as the SPY, and that does not happen often. Luckily, this week, they rejected the low, which was a break of both trends, scary, and now we're back above both trends, which is good. However, yes, it has momentum on its side. However, if I look at it from the weekly slice, weekly candle slice, IYT, I need to see more work to break the high here and to see it actually surviving this, because look at these moving averages. I mean, it was below everything, and that is not a good sign, and it's still not a good sign. I need to see a good recovery there. All right, that's an important note. You know what else is important? Fear. What does that mean? The fear gauge, VIX. Why do I bring it up? I don't trade it. It's really hard for me to make money in the VIX, but look at where it is. It hasn't been lower, sure, a couple of times, 1, 2, 3, 4. Well, yeah, well, this is only 1 year. Okay, let's go to 10. You know, we've had lower, but very few. 10 years, okay? So it's important to note that the VIX is getting too low, meaning people are too, I don't care about things, up, 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 and away, and this is when they get blindsided, all right? That's just my opinion. You got to pay attention to the VIX. All these are signs. So the variables, we got political, took a back seat a little bit, but boy, the scary issues loom this week. Economic reports, mixed, you know, and for some reason traders are still treating bad economic news as good news, like she's not going to raise rates. She's raising rates. She's told us so. Currency, the dollar looks strong today. The look against the euro will be a visual image for it, but I thought strong dollar was bad for stocks, but not today, not this week. So it's above anybody's pay grade. Anybody tells you knows what's going on is living in a dreamland. The QE in Europe still ongoing. They bought 52.5 billion in their first month. It was a short month. I think they started on the 9th. Oil spiked, but showed some brilliance, like I said, but mired. Technically, it can be in the 40s pretty quickly. It's headline trend. It's a manipulated market. It's a rigged market. Pun intended. All right. So bonds and the TLT represents the bonds. They need 131.5 to reach for 134. If they lose 129.5, 128.5, sorry, they could be down at 125 quickly, and they need to hold that, because if you look a long period of time, longer than 1 year, this is important. We've come so far. Higher lows, that's great, but if you lose that trend, you may overshoot to the downside. So keep that in mind. Those are bonds. What about the 10-year, which they move opposite directions? 10-year is so tight right now in range. So right here, it needs to make a decision. Beat the 1960, whatever, 19.6 or something, and reach for this. But this has been death right there. Or lose it and revisit the lows of late, which I can't imagine that happening, but it is there. Tickers, we've got tons of tickers. How do I trade this market? How do I trade it? For me, I'm doing iron condors, but I'm doing them very cautious, very wide, very long in time. That's how I'm making my money. There are a lot of tickers that can you trade you can trade out of Chipotle. Oh my gosh, it has earnings coming, breaking out of this one, out of nowhere, $32 move on Friday. Maybe it's reaching for 710 to fill the gap. So debit call spreads in Chipotle could pay, for example. Caterpillar, I'm not so enthusiastic. I think it took a ride on GE, and I think that it needs a lot to go higher than here. I don't want to short it flat out, but this is, it's peaking like it wants to reach for the 89. It's a long shot, but if you're bullish markets, maybe that's the way to go. Personally, I don't like it. We have a few beer companies that made some move, like Bud and Tap. I would look into those. I'm not optimistic on either of those two. They came to me from a friend, and they look heavy. That's Bud, and that's Tap. Both have some put potentials there. GoPro's trying to make a go for it. We always have to mention GPRO. If it takes out that green line, it could be reaching for the 55. I personally don't like it, but debit call spread there could pay. All right, Alibaba, forget about it. It had some brilliance because of the China move. But then that went away. And Tesla had some positive action this week. Huge gap up, short squeeze perhaps. Has it run its course? People say if it hasn't run its course, it's reaching for 230. I need real news to get it to 230. So I'll be a shorter of Tesla if I was forced to trade Tesla today. All right, so this is Nick signing out. Hopefully you have a good week. If you have any questions, hit me up.